Morning, everybody. Welcome to Financial Pro Podcast. Today we have got a Mortgage Pro guest expert interview. Can't even get my words out this morning with Matt Poole. How you doing, Matt?
Good, thank you. Yeah, all good, thank you. How are you?
Yeah, very well, mate. Cannot grumble. Is this the view that I'm seeing? Is this the newly built garden room?
Certainly is. Yeah, loving it.
Yeah. So, say again.
Yeah, we had a laugh about it because I said to my wife when we first set up, I want an office in the garden. So she was expecting a desk, a nice place to work. And we've ended up with an office, a bar, a gym, a nice social space for us. So yeah, a bit of everything really.
Yeah, I know. For those who are on the podcast, there's a massive TV behind Matt. There's 3 stools, which does look like a bar. There's downlighters. There's blue lighting. Mate,
the client
yeah,
area.
exactly. Nice little lads' room, hey?
Yeah.
So for those who don't know you, give them a wee bit of an insight into how did you join the mortgage industry?
So I started out working for an endowment claims company back in 2007. So that got me interested in mortgages firstly and foremost. And I knew that industry wasn't a long-term thing, missold endowments wasn't going to be a long-term career and it's going to sort of end at some point. So off the back of that, that's where I thought, you know what, I'll do my CMAT qualification and look to get into the mortgage advising world. So passed that in 2008, March 2008, 13 years ago now. Did take me a bit of time to get to being a mortgage advisor, no experience, I was young. So yeah, I've been a broker now for coming up to 7 years this year. Never looked back.
And you joined at the best time to join the mortgage industry as the credit crunch hit.
Yeah. Well, credit crunch hit when I did my CMAT qualification.
Yeah.
We set up ourselves in the middle of a pandemic. So yeah, we timed it right.
Yeah. Were you employed when you first joined?
Yeah. So I worked at the old Britannia Building Society first when I first qualified back in 2008. I knew I had to get experience. So I worked on the counter there, worked my way up, did home insurance advising, did a bit of mortgage advising. And to be honest, I failed first time. I just couldn't do it. It was around 2010. I think it was I had my first stab at it. So 2010, still feeling the effects of the credit crunch, obviously. And yeah, I just couldn't do it. It got to a point where my manager said, you either look for something else in the bank or, it's not for you basically. So I failed first time. And I went back to it in March 2014 at the bank again, worked my way back up again in the bank. Bit older, bit more experience, bit of sales experience. Did it for 6 months at the bank. And then, straight into got a mortgage broker job for a company in Derby, driving around doing debt consolidation cases. So that's when it really started, 2014, yeah.
So what was different between 2010 when you failed and then 2014 when you became successful at it?
Yeah, so I think the main thing was experience, really. So in that time, I'd bought my own first house in 2012, which was a shared ownership basis, which was a bloody nightmare. So I'd been through the process myself at that point. So I think it was a bit of confidence, a bit of work on myself as well in terms of knowledge on the mortgage industry, just doing stuff myself, really. And at that point in 2014, I settled down in my personal life as well, obviously, owning my own home and everything. And it just felt the right time, really. So I probably rushed into it a bit first time around, wasn't ready for it, hit me like a bus, and I knew what to expect the next time around. So a bit more experience, bit older, just felt like the right time, really, to go all in on it.
Yeah. And do you think that's a really important thing for people who are beginning out on their journey, that actually having been through the process makes it easier for you to become an advisor?
Yeah, definitely. Because, if you're not a homeowner or you're not been through that process yourself, you don't know what to expect yourself, really. So unless you go through that stress yourself, you know how stressful it is, even when you're in the industry and you know how hard it is. I know from yourself when you did yours, and as a business owner, it's hard work doing it yourself. And we moved house 2.5 years ago. Even then, it was a nightmare, stressful. So I think unless you've been through it and you understand what it means to people when you do get it through, it's a great feeling, yeah.
Oh, without a doubt. It's like, I think every mortgage broker will attest to the fact that if it's a family friend, if it's your own, or if it's a friend or a family or your own, they're just the ones you don't want to do because they're the ones that are always going to go wrong.
That's it. The ones recently, especially the last 8-9 months, even the straightforward ones, there's been something wrong with them. And it's just like, what is going on? But yeah, more pressure when it's your close family and friends, definitely.
Definitely. So joining the industry in 2010, I think people are going to be, especially the ones who are starting out, because we do get a lot of people who start out to this, and we'll come more up to date in a moment. But what do you think was so different? I know you hadn't bought a house at that time, but what was so different in 2010 that you just didn't click for you?
I can't put my finger on it, to be honest. It was, I lost my dad in end of 2009 as well. So whether we're still feeling the effects of that, and I wasn't fully focused and fully committed on my career at that point, that could have been a big factor looking back now, really. So I think it was just the timing of it all, really. It probably came a bit sooner than when I was ready, really. Because like I said, I worked on the counter at the bank, just cash in, cash out, generating a couple of leads for financial advisor, mortgage advisor. Did a bit of home insurance advising at that point as well for 6 months or so. So yeah, I think it was more a timing issue, and I just wasn't ready. Didn't have the experience to go all in on it.
Yeah, fair enough. And that's so true. It's and I'm sorry to hear about your dad. Obviously, that's a tragedy in itself, which would have no doubt, I couldn't even imagine it. I'm very fortunate to obviously have both my parents and stuff, and for that would have, subconsciously, I'm sure that would have played an had an influence on your ability to process and manage that, as well as managing something new, which, let's be honest, this job is bloody complex and it's underestimated by anyone who's not in the industry.
Yeah.
So bringing it more up to date then. So you found a job, you were driving around doing debt consolidation. How did you enjoy that side of things, driving around up and down the country, no doubt, and dealing with that side of it?
Yeah, the job itself was brilliant. When I got that job and when I was doing it, it felt right, and that was what I was meant to do, really. So I felt right at home doing it. So working from home at that point as well. We had 2 kids at that point. They were both in school or nursery, so I could drop them off, come home, get on with my work. The driving around wasn't ideal. We could have had an appointment at 8 o'clock in the evening in Sheffield when we're in Manchester, for example. Back at 11 o'clock at night, then they give you one in North Wales at 10 o'clock the next morning. So it was very up and down and very, very intense, really. But yeah, I really enjoyed it. Got me in the mortgage broking world. I understood that side of it. That's all they did, though. So it was very niche in what they did in just the debt consolidation remortgages. So it got me through that point. But then we had our youngest son, Alfie, in January of 2016. And with my wife and Alfie at home, trying to work from home, newborn baby, it was tough. But it served its purpose. It was a great job. It was a great start to the broking world.
Yeah, and it's key there, because I think this is something that people underestimate as well in their expertise in the industry. You work for a bank. Then what were you doing between that job and the other one, between getting into debt consolidation and the other one?
I went back to mortgage advising at the bank in March 2014.
Yeah.
Went through the training program with the bank again, which was a couple of months probably. Got signed off to cash status, and then handed me notice in September. So yeah, a short stint again at mortgage advising, but I knew it wasn't what I wanted to do long term. Advising the bank, you're very restricted. It's you're stuck with them products. If they're no good, no one's going to come to you anyway. So I knew it wasn't right, but I just had to do it to get to where I wanted to be. Really, yeah.
But that's the key thing that I want to pick up on here, because it's the experience that I had in my own journey. I started with the Woolwich in 2003 before I then went to work for Connell's in a estate agency, before I then went into brokering. Now, if you'd have gone straight into being a broker, do you think it would have been harder than the journey you had going to the bank initially?
Definitely.
Yeah.
Definitely. I think traditionally that was the way people did it. Get your experience in the bank in a safe environment. You've got the support there of compliance, managers to guide you on it all. So I think, if you're going to do it, that's a really good way to do it, to learn the ropes and then branch out into the broking world from there, really. Yeah.
Yeah, I look at the industry now in comparison to when I joined, and I think there's so many nuances that you get. You'll get, if you're a broker, you're going to be faced with first-time buyer, moving home. You're going to have remortgages, product transfers, buy to let, bridging, development, commercial, HMOs, serviced accommodation, depending on, you know, where you hang out and what content you put out if you're using social media. But to try and understand that, as well as the multitude of lenders, the 600 criteria changes that there are in a week, it's a real tough gig. But if you can minimize that and get your experience in a bank where you've just got one lender and then all you've got to deal with is just the criteria and the client type of one bank, or in an estate agency where you've got a limited opportunity, I just think you'll develop much quicker as a broker. Would you agree?
Yeah, 100%, definitely. And then once you've got that base knowledge and the base understanding, everything, I mean, the lenders, they can be quite similar in what they offer and the criteria and all that, but they all have their own individual quirkiness to them as well. So yeah, building your experience up in the bank, understanding the processes, how it all works, it's a good foundation, definitely.
Yeah. So after driving around on the debt consolidation cases and traveling around, where did you go next? What was the next stage in your journey?
Yeah, so that was my previous role, actually, which I've just left nearly a year ago now. That was, I saw an advert on Reed and I knew it got to a point where I was looking for something else because the driving job had sort of come to the end, really. I just couldn't do it anymore with Jenny at home, with Alfie and all that. So found a job, and it was a startup company, actually, just based locally in the office, which was ideal. And that was two guys who sort of specialised in social media, and they were, at the time, helping brokers with social media to generate leads and all the rest of it. And they were looking then to build a brokerage on the back of that to supplement bringing leads in, really. So that was back in October 2016, joined the guys there, helped build the business up and everything. And then that was a real eye-opener, because going from debt consolidation remortgage, I knew that part inside out, doing that for a couple of years. Going to this last job was everything. Like you say, first-time buyers, home movers, remortgages, buy-to-let, bridging, development, a bit of everything. So since 2016, my knowledge of everything has probably tripled, quadrupled, and, you know, you just pick it up as you go along, don't you, really?
Yeah.
So, yeah, that was sort of a nationwide company dealing with things over the phone remotely, which has helped with the way things are today. Obviously, we're used to that anyway. And that was a really good stepping stone to get to where we are today, definitely.
Yeah. So that gave you next level brokering skills. And what was the reason for deciding to go self-employed? So a couple of questions. What made you want to go self-employed? Well, let's go with that one first. I'll break them down. It's easier. Yeah.
So when I started this journey, I always wanted to run my own firm. That was always the ultimate goal. And throughout the years, it's never been, I suppose there's never a right time to do anything, but there's never been a right time. Having 3 young kids, a family to support. Jenny worked with me at Edison Wells as well. So Jenny was there as the administrator. I was doing the mortgages. And it's just having that safety net of a regular monthly salary coming in. It's just a safety net for you, isn't it? So it got to a point last May where the directors got in touch and said they were actually closing the business down. So we had a couple of options with them and to go on our own, redundancy. So in the end, we took redundancy last May. And then we thought, you know what? We've done it long enough now. We've got enough experience, enough knowledge. Now's the time to do it. So it just felt like the right time. May, June last year it was, nearly a year ago now. Can't believe it.
Yeah, so May, June 2020, if you're, depending on what decade you're listening to this in. So May, June 2020, kind of hand was forced then, really, was the gist of that. So how scary was it? How fearful were you at that point?
Very, yeah, you know, it's going into something that's not new, because you know how to work things. And I did run Edison Wells to an extent as well, so I knew how that side works. So it wasn't something new. It was just the unknown of going into it yourself. You got to rely on yourself, obviously. Then there's no regular income potentially. You've got to build up your own pipeline, your own client bank. And I think one of the things that stood us in really good stead was the guys there. They were big on helping us promote ourselves on social media and building a bit of a personal brand at the same time as well. So it felt as though we weren't going in cold to a new audience. We had a bit of an audience already. on there, especially on LinkedIn. That's sort of where I've lived for the last 18 months or so with my content and everything. So built up a bit of an audience there, and it couldn't have been a better timing, really, looking back. The stamp duty break helped massively, obviously, that's still going on with people moving home. People who I'd worked with before, they were getting in contact, good referrals from friends and family, and people have helped before in the past as well. They found us now. So, you know, it was a worrying time because of going into the unknown in the middle of a pandemic as well, obviously. But yeah, the last 10 months or so, they couldn't have gone better, really, to be honest. So looking back, it's the best thing that happened.
Yeah, happy days. And that's now 9 months ago, if my math serves me correctly.
Come on, Gary, you're broke. You know that. Math is your strong point, remember.
Where's my calculator? So you're 9 months into the journey. You had the fear and the scare of hand being forced and having to make it work, because obviously you've got kids and stuff as well. Yeah. And what network are you with, or what made you choose the network you're with, in case you don't want to share their name?
Yeah, happy to. Yeah, so we're with Primis Mortgage Network. So we were with Primis Mortgage Network in the old company as well, and I had a good relationship with the guys there. It was me who dealt with the ins and outs of the running the business. So I've already had that relationship with Primis when we were at the old company. Got in touch with them, the regional sales director, explained the situation, and they literally got us from application to being authorised, ready to go in 4 weeks. So literally, as we went through our notice period, the day our notice ended, we were good to go. So it worked out really well, and we had a good relationship with them, good support from them guys, and it just made sense, really. Yeah.
Yeah, if you're going from you're effectively working with a business that was with Primis, so the transition would have been so much easier, because they would have done an element of due diligence and seen your cases already, wouldn't they?
That's it. Yeah.
Yeah.
Which was brilliant.
Yeah. So 9 months ago then, and into that journey, what was kind of your vision when you first, when you started out? What's the vision then, and what's the vision now in comparison?
Yeah, well, the vision then was, didn't really have one to start off with, really. It was just thinking, oh God, we're starting a business here. We need to get people in quick to try and make ourselves some money. And I think it was July or August last year. The first couple of months, it went mental. So it was a really, really good start for us. So the vision at the start was just to help as many people as we could do to get some business, build a bit of a pipeline up. And it's continued since then, really. So the vision is something we're working on at the minute, actually, and trying to think of where we want to go with this now. So we're sort of working on, me and Jenny, we're working on who our ideal clients are, who we want to help on an ongoing basis. Is it this person? Is it that person? And sort of market to them. And then we don't know how big we want to get it, really, so we don't know whether we want to have it a nice family-run business where it's just me and Jenny, me doing the mortgage, Jenny doing the admin and the marketing bits and bobs for us, which works really well at the minute. We've got a good pipeline built up now. We've got holidays booked. We can do what we want, in effect. It's nice. I can drop the kids off at school, pick them up. It's just working really well at the minute. And we're thinking now, do we want to get to a point where we've got a big team behind us? We want to have a massive firm. So it's step by step, really. But, the next stage, I suppose, really will be to bring on more people in the near future if we're in a position to do so. Mm-hmm. So my brother's actually going through his CMAP at the minute. He's in the army at the minute. He's going through his CMAP at the minute. He's due to come out of the army later in the year. So we've got a ready-made administrator, trained up to be a broker if we want to there as well. So there's plans to progress. We just don't know how far yet. That's what we're working on.
Yeah, and it's that whole element, I talk about it in the academy and stuff. It's just building. An architect designs a house before you go and start building it. And the biggest thing is just having a goal that you're working towards quarterly, annually, because then it makes it so much easier to build. If you know the numbers you're working towards, and the people that are going to help you to achieve those numbers, and that the lifestyle that can then give you and how you want to structure your day, if you kind of map that out, you've got your satellite navigation destination that you're working towards. And then it's just a numbers game. Well, if I want 20 grand a month, how many mortgages do I need to do? How many protection? How many broker fees? How many GI? How many wills? how many leads do I need in order to service that amount? What number of referrals are we going to get? What lead sources do we need? What social media do we want? What introducers? It becomes paint by numbers, which is so much easier rather than flapping around trying to guess it all.
Yeah.
How much are you enjoying that journey, trying to map all that out? Is it tough?
It is tough, but it's a great challenge. You know, we love a challenge. We're always positive, upbeat. So take it as it comes, and loving it. Yeah.
So from a marketing perspective, having kicked off with no pipeline and been forced going into self-employed over the course of the last 8 months, what's worked really well for you from a marketing perspective?
So for me, from a personal point of view, I've been extremely active on LinkedIn over the last, since we started really, and going back before that, about 18 months now on LinkedIn. And I've been posting daily in the last few months, and that's working really well. Just having a bit of value to my audience, a bit of everything really, a bit about me, a bit about the business, testimonial, a bit of social proofing. So just being active on there is really working. And I must be getting 2-3 inbound messages a day now on LinkedIn, which is really helping. Facebook, Jenny's doing all the Facebook stuff, so again, that's different types of things, more business related on the Facebook page for us. You may have seen our "Don't Be a Dick" series that's come out now.
I love that, mate. I love that.
It's all Jenny's idea. She's the creative one behind us. I'm very process driven with the mortgage, obviously doing that side, but Jenny's very creative with that. So we've got "Don't Be a Dick." That's going to be a weekly thing now. So just a bit light-hearted, but at the same time, educational at the same time as well. So just get a bit of attention, really.
Exactly. And that is the thing, isn't it? It is about attention. And you said something there which is highly valuable, because a lot of mortgage brokers, financial services professionals will be listening to this thinking, they're not necessarily creative. They're a process driven person. They're focusing on the clients and focusing in the business, working transactionally day to day.
Yeah.
But you have Jenny who is helping you to create the content.
Yeah.
And that is what's then driving more leads and sales into the business. And no doubt you have an influence on that, because you'll give her the process, let's say boring stuff as a mortgage, but then she'll make it interesting. Would that be a fair assumption?
Yeah, pretty much. Yeah, definitely.
Yeah, and you in terms of a ratio, because I think this is important for people. You've had some posts which have gone almost to a degree, you could say, mini viral, on LinkedIn. How do you balance the personal brand, the business brand, the mortgage content, and the personal content, if we kind of slice it down the middle and go business and personal?
Yeah, so I think on LinkedIn it's more personal stuff on LinkedIn, definitely, because people want to know you as a person, and by getting to know you as a person, they'll start to know you, like you, trust you, and that's what it's all about. If someone's making one of their biggest financial decisions that they're ever going to make, you want to know who they're dealing with. So, I try and put myself out there as much as I can do on LinkedIn, certainly from a personal point of view. And one of the biggest posts we've had was all about being made redundant, setting up ourselves. It was a picture of the office and me sat on the sofa. So, you couldn't get much more personal than that, really. So it's, definitely works. Definitely.
Yeah, and that's the trick that people miss. And here's the secret sauce, people. It's exactly the same on every social media channel that you're on. There's a reason why it's called social media. It's not called business media. So just have a look at never copy. I'm going to put that caveat on it now. Never copy someone else's content, but go and check out Matt's and see what's actually working in terms of the audience that he's building. Don't copy it. Use it as an inspiration, or, model it to agree. Don't come out with your own version of "Don't Be a Dick," because he has owned that one. And if I see it, I'll comment on your posts, people. But
it'll be up to you as well. You don't want that. So.
Exactly. You can take inspiration from other people and you can see what's working. But Matt is a massive testament to the fact of social before business on media. And it has a bigger impact to driving your leads, clients, and sales. And that's where so many, they're incessant on sharing mortgage content, but they forget actually it's people by people, and people like you will like you. So how are you managing this number and volume of leads that you've got from a process and a system perspective then?
Yeah, so it's all managed by myself at the minute. I'm at a position at the minute where I can do that, which is nice. So I'll just spend half an hour or so in the evening just to reply to the messages, send out my Calendly link, and if they want to book an appointment with me, it's there. They can just book straight in then. And then into that, it's doing the strategy call firstly and foremost, understanding the situation, what they're looking to achieve. And a lot of the people we deal with, especially from LinkedIn, it's mainly business owners. So you'll know from experience as well that a lot of people in that area, they're not ready to do anything just yet. They're just testing the water, seeing what's what, how to plan ahead. So, you go on that journey with them. So it's managed well at the minute where lead comes in, I'll message them back, have a bit of conversation with them, send my calendar link, booked into my diary, and then we sort of move it from there, really.
Yeah. Did you used to always use the strategy call method?
It's always been there, but I think it's become more prevalent since I've joined the academy, definitely, because we had a process at the old company where we just do the fact find firstly and foremost. So it's a similar sort of process, but just watered down a bit now. So, we'll take sort of 15, 20 minutes just to have a general conversation. I always say to the clients, look, today is all about just getting out what you want to achieve from today, what you're looking to achieve in the future. What's this off the top of your head? What's your income looking like? What's your expenditure looking like? And then from there, we can say, right, well, you send me this, that, and the other. I can then look at things properly and let you know exactly where you are. If we need to plan ahead, what we need to do to get to where you want to be. So, yeah, it's always been there, but I think it's more, I can't think of the word. It's something that we're more focused on now. To know that it is just an initial, more strict. Yeah, just an initial call to get the ball rolling, really. Yeah.
And do you get the documents in before you kind of proceed with any kind of fact find or anything like that at all?
Yeah, definitely. So you could have a conversation with somebody and they'll tell you they're earning X, Y, and Z. When you get the paperwork in, they may have misunderstood what you've asked them, or they may have gone on a different figure on their accounts or anything like that isn't quite right. So if you do a load of research just based on what people tell you, 9 times out of 10, it won't be accurate. You've wasted your time. Then you've got to do it all again anyway. So initial call, 15, 20 minutes, get the documentation in. And then once that is in, then I'll sort of look at what's out there and where they stand with everything.
Yeah, love that. It's especially in this world that we're in now where, it's so detailed and you've got so many pieces of the puzzle that you've got to pull together in order to be able to even just give out a mortgage amount. The perception with the consumer is, how much can I borrow? Yeah, and then they don't tell you about the credit card and the CCJ and the bank statements and the lease payment that they've got and, the student loan that they've had for bloody ages. So, I'm a massive fan of that. So
the best ones are where they plan on paying something off, but they haven't done it yet. So they won't tell you about it. Then you'll go and do a decision in principle. It'll come back as a decline, or they can borrow less than what they think. And you'll say, oh, what about this commitment? Oh, yeah, I'm paying that off, so it's fine. Like, yeah, but it's on your credit file, so we still need to take it into account. So that's a good one.
One of the best ones I had was a self-employed business owner, and my wife's on 32 grand a year. Okay, cool, and that's where we kind of got it all in. Then the pay slips come in, and I'm like, why is it I'm not showing 32 grand a year? He neglected to tell me the fact that was the full-time wage, and she only works part-time. How does that even work?
Come across
I know. It's like, the full-time wage is 32 grand a year. Well, you forgot the next part, which is like she's earning 18 part-time or whatever. It's like crazy. So, so in terms of being with Primus, and this goes for anybody who's an AR at the present time and thinking about your growth strategy as well in terms of your vision, do you have a separate, or how do you manage clients, customer journey, and leads and sales, and do you have a system to manage that outside of the network system?
Not at the minute, actually. That again is something we're working on at the moment, to be honest. So we've got our internal system with Primus Toolbox, which is really good, to be honest. From a compliance point of view and from a tracking point of view, it's all in there. So we can put the clients on the system, we can put what stage they're at, when the next contact dates are. So we've got that for our ongoing business, but the trouble is if we ever leave Primus, that data goes with it at the same time as well. So Jenny and I, we're just doing some research on CRM systems now to work out which one's going to work best for us as a business going forward. Because if we do expand as well, obviously we'll need that system and processes in place to make sure that the client goes from A to Z and it's the same every single time. So yeah, something we're working on.
Yeah. And that's I've done a previous episode for anyone who's new to the podcast called Making Money Whilst You Sleep. I've used Ekeeper since the October of 2018. I'm making myself think. And that's helped me scale at the present time in March of 2021 from 2 people effectively to 17 people. Now I'm at the phase, having tried to do this in 2016, of developing my own CRM system, because what got us to here is not going to get us to the next phase. And we're going for, market leading 100 people, probably 50 advisors, that kind of thing. So we need more reporting. We need more robust. I want to really automate the marketing and the strategy, which is my bag, and really try and streamline this aspect. But for you and everyone else listening, just because Ekeeper is right for me and help me scale, it doesn't mean it's going to be right for you and you're looking at it. So within the academy, the ones that I generally see are smarter. Make sure you get check it out. Make sure you, at least of all the systems that you look at, have a couple of demos. Pipe Drive is another one that's massively used by a lot of academy members. And there's I think there's another one which is Mortgage Magic, which I haven't tested or seen personally. You've got 360.net as well. So Ekeeper, Smarter, Pipe Drive, 360.net, and then Mortgage Magic, which I don't know much about, are systems that you are well worth going to check. But if you want to understand what Ekeeper does for me, then listen to that previous podcast episode of Making Money While You Sleep. But yeah, it's not just about leaving the network as well there, because caveating that in case Primus listen in, Matt has no intentions of leaving, but he's just future-proofing his business from who knows what's around the corner. But it is about the reason why you have a system outside of a network system. And I was with Primus when I implemented Ekeeper back in 2018, separate limited company, wanted to know if I could leverage out the compliance. And I joined, I set up with Primus, great network, had Richard Coulson on the podcast previously as well. But for me, it's about maintaining the customer journey. It's about consistency amongst your advisors. It's about automation of emails and text messages and those things that sometimes aren't offered by a network's compliance tool. So that's really what it does, is it makes you more efficient and it helps you to provide a better service realistically to your clients in your business. So yeah, that's good to hear that you're doing that as well, because when you get to the phase, have you got views to take on advisors in the future, Matt?
Hopefully, yeah. It's one of those. I go through phases where I think I want to have a nice small family-run business. Then I'll go through think, do you know what? I want to be like you, Gary, and have a massive team behind me. So it goes from one extreme to the other, to be honest. But yeah, something we want to work towards, definitely.
Yeah, and you'll constantly do that roundabout for a period of time. My guesstimate is based on my own journey since 2016 of getting back to mortgages, is I've done a similar thing. One day, I'm just quite happy with a team of 4. Next day, I'm going to go to 10. Next day, and it's a vicious cycle. And I think, a lot of my time was spent testing, which is why the academy now exists. So you don't have to do the testing and you can learn vicariously through my mistakes and my testing period. But I think if you have the thought, you're going to do it.
Yeah.
That's if you think in it, and it's even if it's even an option, you're going to do it at some stage. It's just a matter of, when to a degree.
Yeah.
Just to chuck that curveball in there. So not predicting the future, but that would be my prediction. So, okay. So we've got vision, we've got marketing, we've got process, we've got systems. And it's just you and Jenny at the moment. Have you got views to bring on? What's next for you? An admin or an advisor, do you think?
I think the way we've talked about it would be for Jenny to do the marketing full time, because that's what she's good at. She's good at being creative and all that sort of stuff. So the next step will probably be a VA or an admin assistant. Probably go that way with it, to be honest. And then I want to get to a point where I'm the face of the business, driving the leads in, and then we have another advisor who I'll filter and the deals out to, really.
Yeah, perfect. And it is, you can get advisors in, but they're going to cost you 50%. And that's nigh on, slightly different. But in terms of when I got back to mortgages, I kept Lauren after my downsize. My next one was then bringing in a marketing apprentice. And then it was a trainee advisor, which technically was more like an admin realistically as a trainee advisor, paraplanner trainee advisor. So this job is so admin heavy now, isn't it? That the consideration of actually someone in marketing. Have you ever considered, as opposed to taking on an advisor, having someone in pre-sale and post-sale?
Possibly, yeah. That could work actually. To sort of have an initial conversation, ask some general questions, earnings, outgoings, just the affordability really at the outset. Someone's 400 grand and on 20 grand a year, we know it's a non-starter. So yeah, they could filter out those. So yeah, that's something we'll work on definitely. And I've even had thoughts where I could have, like you say, an admin team, post-sale completions team, life department, an all-round working machine, basically. Yeah. So sort of stuff we're working on. It's early days.
Yeah, we've just taken on our first protection-only advisor, insurance-only advisor. I've got 3,000 clients from 2009 till 2015. So it's about time we start getting back in contact with those. Now the mortgage machine is working and automated and systemized. But yeah, from just to chuck a thought in for you and for others that are there as well, is that element of, you do the strategy, someone else books your strategy call for you, you do the strategy call, they agree they want to go ahead. Let's call them PA. The PA chases the documents, pre-fills the fact find, gives it to you, you do your research. They could key the AIP, you could check it. They could key the application, you could check it. Potentially they could do the suitability letter for you. You're then just focusing on the client, on the relationship, maximizing the opportunity. And then once that's submitted, it goes through to the admin, who then does everything after that, uploads to the lender, uploads to the network. And this job is 80% administration now. So the more you can offload, the more money you're going to make. And yes, you'll be the main earner, you'll be the only earner. But what will happen in that journey is obviously freeing up your missus to be able to do the marketing as well. Is my next move after that was realistically 2 admins. Then it was 2 advisors. That freed me up even more. Like, you want to be the face of the business, then freed me up even more to be able to generate more leads, which meant we took on 5, pre-COVID pandemic in February of 2020. So marketing is what drives sales and leads, as I'm sure you're aware. So it's about setting all that side up. So how do you view your sales then? Are you a fee charging broker? Are you a decent protection penetration broker? How do you look at the business from that point of view? Yeah,
so like you say, it's just doing what we can to help as many people as possible and helping as many areas as possible as well. So we do charge a fee. Again, that's something we're working on when to charge, how much to charge. So at the minute, we're $499 on completion at the minute. So I know that potentially needs to change to help with cash flow and all the rest of it. So that's, again, something we're working on. Protection, we try and help people with the protection as much as we can. So we're probably on about 60% at the minute on what we do in that side.
Nice.
But again, it's more having a proper process in place to make sure that we're doing that every single time. We've got solicitors on board, we've got to check my file, we've got surveyors, so we have got different revenue income streams, which is always nice, not relying on one source of income. So we do charge a fee, and that will continue definitely.
Yeah, I think I did a post about this recently in terms of, I think it might have been a Facebook Live, just how the industry has changed. And now it's just so much, even pre-COVID to now, everything's taking so much longer. There's so many more criteria changes. If you want to go, if you don't want to pay a fee and you go to a bank, then realistically that's fine because the bank's there. But a client is paying for the expertise, the time saving, the knowledge, the research, the criteria. And everybody has their model, and I appreciate, some models don't necessarily differ from others, and there's plenty of fee-free brokers out there who make a success of it. But how much difference could it make to your business and your income and the service that you can provide? If you don't charge a fee, could you send your client a welcome gift? Could you make a charity donation? All these kind of things that when you actually bring in more per client, you can build a better brand. You can give more back. You can do more with it, and provide a better service. So that's cool. So what's coming to a close in the not too distant future? What's kind of been your biggest lessons over the course of the last 9 months since going self-employed and starting your own ship? Starting your own ship? That doesn't even make any sense. Starting your own business.
So it's something else then.
I'm just going to disappear at this point.
I think for us, it's to not be scared of trying anything. It's, it is a work in progress. Things will change daily, sometimes weekly. If you've got an idea, go for it, see what happens. If it works, great. If not, learn from it and move on. You've got to always be testing and always trying to do something different.
Yeah, I love that. Always be testing. ABT is that so important. Everything you do in a marketing, in your process, in your system. It's like, I've always loved getting negative feedback from clients because that gives an opportunity. I hate it when people say how everything's great, and it might be my perfectionism nature or my element of OCD or stuff like that. But I'm like, don't blow smoke up my backside. Tell me where I'm crap. Tell me where things are going wrong, where we can improve, because that's my marginal gains mentality. It's if everyone says how great you are, that's not teaching you anything. But always be testing and trialing and putting new things in is definitely a vital thing for without a shadow of a doubt. So what do you think is the mindset that you need to have as a self-employed broker versus an employed broker?
It is completely different, and I've said to Jenny, I've had days where I've struggled because I'm in the garden, but still working from home, really. I've got the nice space to come to, which is good. So I think your mindset just has to be, you have to be surrounded by people who want the same thing as you, firstly and foremost, which is where the Pro Academy is great. There's a great bunch of people there who keep you focused and keep your mind on it. And you want to do as well as they're doing as well, which is always good. We've got a great support network from Primis. They do webinars and, motivational stuff all the time as well. So I think from a mindset point of view, it's just understanding that not every day you're going to be on it 100%, but it's making the most of what you can with how you feel. And, if you need some time off, do it. I had a bit of time in the garden yesterday afternoon. That was the first time I've taken a bit of a seat back for a while, to be honest, but you need time for yourself as well. So not being on it 100% all the time, definitely. Take time out and enjoy it. Enjoy the ride.
Yeah, it's definitely a ride as well, isn't it? It's a fun little roller coaster.
Yeah, definitely.
It is that, you set the destination, but you have to enjoy the journey, exactly as you're saying there. And that every time you face a new challenge, it's going to be stressful. It's going to cause anxiety. But when you come to face it again, you've already beaten it once. So it's not as necessarily as scary the second time around. And that's half the fun of business. It's that whole element of who do you need to become to get to the next level. When you take on your first employee, that's going to be different. When you take on your first advisor, that's going to be different. Yeah. When you start to get an office and that's a new cost that you've got to pay out for, there's a mindset shift to all these different things. And I think that's a vital thing that you said there is the rest and recovery. You know, Usain Bolt could only sprint 100 meters before he would have to rest. If he does his 200, the second 100 is not as fast as the first 100. You can't run. Well, there are crazy people out there who do it, but they've trained to run a marathon every single day for X number of days, but they still have to have the right amount of rest and recovery. And they'll jump in ice baths. What the hell is going on with me today? They'll jump in ice baths and they'll do different things in order to speed up the recovery process. And particularly now, as the sun is starting to shine, that vitamin D, that sitting out in the garden, actually, if you're procrastinating and you're pushing paper around and you're getting stressed out, or I always reference, did you ever play computer games when you were a kid?
Yep.
And you get to that point where you can't beat the big boss at the end of the level and you've been sitting there for an hour and a half, and then you just get to the point where like controller gets thrown at the TV and your mum tells you off and you go and bugger off and have some lunch and you come back an hour and a half later and you do it bloody first time and you're like, if I just had a break.
You don't see it at the time sometimes, but you've got to be conscious enough to take yourself out of that situation. So it's definitely a thing to work on.
Yeah, most definitely. So it sounds like you're doing that and you're doing fantastically well. And it's been a pleasure hearing your journey over the past 9 months and working with you inside the academy, and the inspiration and the ideas that you share in there around what's working with your marketing. It's been an awesome element to see over the course of the last few months, and I'm excited to see where you get to in another 12 months realistically.
Definitely. We're enjoying it and onwards and upwards.
Yeah, lovely, mate. Lovely. So bringing this to a close then, it's the Financial Pro podcast. Perseverance leads to results, creates opportunity. He was looking down everybody on the podcast. It looks like he's written his answer down. What does pro mean to you?
So basically for me, it's just being the best you can be, and I think you've got to always be learning to keep yourself at the top of your game as well. And being able to adapt to change is key in any situation as well. So always being on top of your game. Yeah,
love that. Always be testing, always be learning. Take time to rest, recover, and recuperate. For God's sake, I need new teeth. And obviously give yourself some time and some space and surround yourself with really good people. So thank you, Mr. Matt Poole. It's been an absolute pleasure. If anyone wants to connect with you, no doubt they can go and do it on LinkedIn.
Yeah, thanks for having me.
No, my absolute pleasure, mate. And for anybody who is new to the podcast, we're over 100 episodes now, over 100,000 downloads. So make sure you go back and start from the beginning, because there's an absolute abundance of content around marketing, sales, vision, strategy. And Matt referenced earlier the strategy call. I have got a downloadable guide, which is the strategy call script, which is just my conversation that I've had with clients. So if you're listening to it on social media, or if you're listening to it on the podcast, we'll put a link in the show notes for you. But if you comment on the social media channel with strategy, then my team will pick that up and send you the link to grab that. But if you want to get the strategy call script, then it'll be in the show notes for you to grab that from the Financial Pro website. Matt, thank you very much indeed, buddy. I'll let you crack on with your day, because no doubt you've got an abundance of appointments lined up. And this is just going to add to it now on LinkedIn. So happy days for you, my friend. I'll be intrigued to see if this does have a positive impact on leads for you via LinkedIn going from this. So thanks for sharing your wisdom over the last 45 minutes.
Cheers, Gary. Thank you, mate.
Cheers, mate.